Well, good morning. Speak Up with Anthony Scaramucci. It's great to be back with you guys on Wealthion. What a great show last week with Anthony Pompliano. We had scheduled to have Dan Tapiero here with us. Dan is one of the more brilliant macro traders and an OG in Bitcoin and understands the digital marketplace probably better than anybody except for Anthony Pompliano. I would say that they're in the top two. But I think he's right now he's tied up. And so I'm going to take some questions from the audience. And I'm also going to talk a little bit about Bitcoin myself and give a perspective. We'll wait for him, see if he comes on. This is the beauty of a live show. If Dan doesn't come on, I'll be Dan. I had a ton of questions for Dan, and I think I'm capable of answering some of them myself, or at least providing my opinion. And I just want to start with where we left off last week, and that was the story of Bitcoin and the eventual cash ETF. And you'll recall that Anthony Pompliano and I believed that there would be a cash ETF. And of course, on Wednesday, after a botching on Tuesday, but on Wednesday, the SEC cleared 11 ETFs, which are now publicly trading this morning. The ETF started out well yesterday. There was probably $4 billion of demand for the ETFs, but there were two things happening yesterday that I'd like to explain to people and talk a little bit about where Bitcoin is today, because Bitcoin's actually down. It peaked at 49,000 yesterday, and it's trading approximately 44,500 right now. And I'll just be brief. I'll just explain this to people because I think it's important. You have two things going on. You had a lot of losses embedded in the Grayscale Bitcoin Trust. There, of course, we're charging 2% on the Grayscale Bitcoin Trust, and they lost taking, if you will, by the people that hold that trust. A lot of that happened yesterday. Some of that is happening today, and people are switching from that trust, which is charging 1.5% down from 2%. They're switching into that trust to some of the lower cost ETFs. Second thing happening, and we're going to ask Mr. Tapiero about that shortly. Second thing happening is the Galaxy, who has been the seller of FTX assets. They were appointed by the FTX bankruptcy administrators to sell assets, have dumped a lot of Bitcoin into the marketplace over the last 2 days. And I think that's putting some selling pressure onto Bitcoin. But joining me now is Dan Tapiero. And Dan, I wish you had heard my introduction of you, because I said that you were one of the original OGs. One of the things I left out, though, is I think you probably have the best PowerPoint presentation that I've ever seen on all things related to Bitcoin. And one of the things that was striking about that PowerPoint presentation is where we are. There was a slide in your PowerPoint presentation that I remember brilliantly, and that was the adoption rate of Bitcoin. You said that we're near 1998 levels with 4% adoption. Tell us what you think is going on in the Bitcoin world right now. Tell us what you think of the ETF, et cetera. Welcome to the show.
Thanks, Anthony. You can hear me okay now?
Yeah, perfectly. Yes, sir.
I might have missed the first part of that question. Always having audio issues. So
no problem.
Bitcoin adoption?
It's okay. We're a live show, Dan. It works this way. Can you hear me now?
I can hear you perfectly. I had to.
Okay, first off, we're listening to you here in San Moritz. I had the opportunity to spend some time with you last year here at the CFC San Moritz conference, and that's where you can see these beautiful mountains behind me. That's where I am today. But I was talking to our viewers and listeners about your impeccable PowerPoint presentation, probably the best PowerPoint presentation I have seen on the macro discussion behind Bitcoin, et cetera. And one of the things that you had in there, which really struck me, and I remember it vividly, is the adoption curve for Bitcoin was tracking Web 1. And in that PowerPoint presentation, you had a 4% adoption going for Bitcoin, which puts us at about 1998 in terms of where the internet was. And so I wanted you to just step back, tell us a little bit of a story about how you got into Bitcoin, and all
Sure.
things related to crypto. And if you don't mind, give us your opinion of the launch of the ETF and some of the sloppiness that's taken place in the launch of these 11 ETFs approved by the SEC this week.
Yeah, well, you got a few things there. 1998, yeah. So actually the data, I wouldn't say that it was necessarily ours. I think it's been pulled from a bunch of different sources. I'm not the only one to see it this way. But we do have a nice chart, and it just says that 4% of the world today have crypto wallets, crypto accounts. And so we went back and we looked, and it was, I think it was around 1997, 98, 4% of the world had access to the internet. And to date, the adoption rate of both of them have been tracking quite well. And so I just looked out over the next 10 years what happened, because I'm an investor, portfolio manager. I care about the future, not about the past. And I said, well, what happened from 98 to 08? And so from 98 to 08, internet adoption increased by 6 times. So from 4% to 24%. And so 24% of the world in 08 had access to the internet. So I'm just thinking, okay, we go from 4 to 24% of the world will have crypto accounts or wallets. I think that's a pretty good bet to make from a macro perspective. I really have the wind at my back broadly in terms of adoption of digital assets, crypto, Web3, blockchain, however we're calling it today, digital assets. And so that's how I sort of started from 20,000 feet, looking at, where is, how powerful is this macro trend? And I thought, at one point 2 years ago, it looked like 3 years ago when I first launched my fund in January of 21, it looked like it was closer to 95, 96, and that we had a 10x, a 10x coming, and that was my original thought. But 6x, and of course we have a long way to go. It's very early in the adoption cycle. So how did I get into Bitcoin? The second question. My first introduction to it was actually through my gold company, GBI, Gold Bullion International. I think we're the owner of Wealthion, or part owner. Or
No, we are the Stephen Feldman and Dan Tapiero, the founders of GBI, own Wealthion, and I think you know this, Dan. Steve and I go back 30 years.
Yes, I do.
I was an associate at Goldman Sachs with him. Let me rephrase that. I was a clueless associate at Goldman Sachs with him, and he was incredibly helpful to me in getting my career started. And so a few weeks back, he invited me on to do a show with you guys. And so, and you're never going to get rid of me. Okay. Just want to make sure you guys know that. Okay. I'm sort of like a bug stuck in the rug. But GBI, Gold Bullion International, one of the largest purveyors of gold as an asset class to put into your portfolios.
Yeah.
And obviously they do a brilliant job, and they offer these services around the world. But you can buy gold at places like Merrill Lynch and UBS, and you can have it stored for you by GBI and reflected in your accounts at these places. So it's a brilliant innovation that GBI came up with. And I think it's a good segue, Dan, because gold and Bitcoin have a lot of similar
It's physical gold. Let me be clear. It's physical gold, sales and storage.
Right, exactly.
Yeah.
But I think gold and Bitcoin have some similar characteristics. Yes.
Yeah, they absolutely do. Store of value. If you've been trading gold or investing in gold for a while, and I had since the 90s, it has lots of different principles in a way like Bitcoin, meaning you have lots of different ways to win with a long gold position. It's not just a hedge for your assets in the fiat world, right? It often does act as an excellent hedge. But it also, it does keep up with cost of living well. That's been proven over time. Inflation hedge. It also tends to go up when interest rates are going down and liquidity is increasing. It's also a metal that's driven by supply and demand. So you have that aspect as well. a lot of different, it's a geopolitical hedge. So, unlike, let's say, necessarily bonds, or let's just say stocks as an asset class, there are one or two fundamentals that drive the prices. With gold, you have, I don't know, I think I counted once 10 or 15 independent fundamental variables that can drive the gold price. And I think it's similar to a much greater degree in Bitcoin. Bitcoin is a store of value. It's a supply demand, also something driven by supply demand, because there is no supply. There's no supply response. I want to get into that a little bit later vis-a-vis the ETF. Oh, look at that. You've got some coffee coming too.
Say hello, babe. Say hello to Dan. It's my wife,
Dan.
Deirdre.
Hi, how are you?
I convinced her to come to San Moritz, which was a bad idea, Tapiero. You know why? Only thing that happened to me was my American Express notifications were going nonstop yesterday. Okay.
Hence, I'm serving him coffee.
Unfortunately, it was not correlated with my rise in Bitcoin prices. So you had a situation of double liability. Bitcoin was going down, and my American Express bill was going up.
Yeah. Well, I'm sure you had to really twist your arm to go with you to San Moritz.
Right, exactly. So hence, I am being served coffee. So you see that it was
very
worth
nice.
It. But your point.
So let me just about Bitcoin,
please,
is that there are many
ahead.
different things that drive its value. I mean, at its essence, Bitcoin is the only true decentralized, permissionless network. And, a few years ago, I was looking at some of the prices of stocks, and you look at something like Twitter with zero revenues, and yet tens and hundreds of millions of subscribers. And so, the old model is, well, you make a product and you sell it and you get cash flow and your company's worth a lot. And here we have all these different tech companies, no revenue, not even thinking about how to generate revenue, yet the network was expanding dramatically. And so Metcalfe's law is the applicable law of value here. And the greater the network, and there's an equation, the greater the number of nodes on the network, the greater the value of the overall network and enterprise is. And so, I hadn't really been plugged into that type of thinking. I was a macro hedge fund portfolio manager for over 25 years. And I started my career in the early days, in the early 90s in Tiger Management, and then worked for Michael Steinhardt and Steve Cohen at SAC for 10 years, and then Stan Druckenmiller at Duquesne, and then pretty much stopped in 2012. I just had never heard of some of the things that were driving, and I wasn't a technologist, I wasn't a VC in the traditional sense. And so it just struck me as incredible that what was built, the Bitcoin network, the math behind it, was something that was a true invention that Satoshi published in an 8-page white paper. And it was sort of unpublished, I don't want to say unbeknownst to the scientific or academic world, but certainly in the financial world, we had no ability. Market guys had no ability to even understand what was explained in that white paper. I mean, the Byzantine generals problem, proof of work algorithm, these are all very foreign terms. None of us knew anything about cryptography or really even coding, etc. And so the value behind Bitcoin is that the network is probably, it's an unreplicatable, I would say, network, unreplicatable event that Satoshi came from wherever, published this thing, and just put it out into the universe for free. I mean, ordinarily you would think someone would, come up with this kind of idea and then try to monetize it through a business or a company or in some way. And that's what makes it very strange in a sense. So how does it make sense? This thing is, the future of global finance. All value in the world will end up being on a blockchain somewhere in this digital asset ecosystem. And the originator is not making any money. For old-time guys like us, I just think that that's a very high hurdle initially to understand. And then you realize that's sort of the beauty of it. That's how value can accrue to it, because it's open and it's open to everybody. And this is when you look at all the things that Bitcoin can do or does, it's as Saylor likes to say, it's a savings technology for people in the emerging world. It's this incredible network. It's a cryptocurrency as well. I call that little b, the cryptocurrency that incentivizes the node operators and the miners to validate the transactions on the platform, so it's not controlled by a centralized entity. I think eventually, all important records will be held on blockchains. We're now talking about AI and blockchains. And so all of these blockchains, again, of course, are all derived from the original Bitcoin code. So when you're looking at value, and as an investor, you think, wow, this thing is incredible. There are so many drivers of value. And now even revenue, with the bump up in ordinals and some of the activity on the Bitcoin network. I'm not making a judgment about that one way or the other, but all the people who claim that you can't value anything without cash flow, now you've got cash flow too, even more than you had before. And so I think the marvel of Bitcoin is really what pulled me into this world. My introduction, get this, was through GBI in 2014, because GBI became the first place in the world where you could buy or sell gold to buy or sell Bitcoin or Ripple. And that was through an integration with a company called BitReserve, which today is the Uphold wallet. And you can still do it. You can still go on the Uphold wallet and buy gold and sell Bitcoin, or do the opposite. Unfortunately, never turned into a big business for us. You would think, my goodness, we were there in 2014. It should be billions. We never really marketed it. It never really took off. It's contributed, but just not in the way that one might expect. But then, Anthony, I understood that we were making money from these transactions. This is 2014, after a year of integrating with them. But I didn't really understand all those things that I just mentioned to you about Bitcoin. And it actually took me about 5 years. Because I kept trying to read the white paper, and I do a lot of homework. We do tremendous amount of research, as you noticed from that deck that I presented. That was in Zurich, I think, in Switzerland, and I just could not understand it, and I kept giving up. And I gave up, and I gave up, and then finally, because I didn't understand these terms, and in 2018, finally, the price had collapsed. And as a traditional markets guy, I've seen that before. Massive bubbles, the asset collapses 90%. And two things happen at that point. Either the asset really is going to zero, or it's the beginning, it's the beginning of the next bull phase, or it's the end of the bear phase, and you have to start buying. So that's what I did. I started buying in early 2019. And built a position in my own entity, which is DTAP Capital and Bitcoin, and then also a little bit in Ethereum. And then I sort of sat back and said, all right, what now? I've got this great position. I spent 6 months in my office in Greenwich, just reading, listening to podcasts, to get to a place where I, really sort of started to understand the value proposition. And look, I think it's very difficult. I don't know how often you address this or speak about this, but it's very difficult for people from the old world. I mean, you're one of the few guys, around my age. It's hard to convince people. I mean, it takes so much work and explaining.
Well, you've done an amazing job of explaining it. And this show, the feedback that we get from our viewers and listeners is they want a really deep dive, which is why I was so glad you accepted our invitation. It's also an interactive show, Dan. I have a chat question coming in from the @Good Humor Man. Of course, I remember the Good Humor Man selling me strawberry shortcake pops when I was a kid. But @Good Humor Man is saying, that is he is saying that it's not decentralized.
Yeah.
And I want you to explain to people why there are some people that think that Bitcoin is not decentralized, but why you and I think, or actually can empirically prove that it is decentralized, if you don't mind.
Yeah, no, I think that, so there are core code. There is a Bitcoin Foundation, and there are people who are working basically on the maintenance of the code. So understand that Bitcoin is code. Now, you could argue that if someone is directing somebody else to clean up and do maintenance of the code, that there is some sort of force out there operating in that way. I see those guys, and they work hard, and they work for no money. And I know that the Van Eck ETF that's coming out is going to give 5% of all of their profits. Did you see that yesterday? To the guys working on the Bitcoin code.
I thought that was great, by the way. Okay, so
yeah.
Again, we need people. So I think the good humor man's point is, well, there's 6, 10, 20, however, a small number of people. So doesn't that mean that Bitcoin is centralized? The answer to that is no. Explain to him why.
Well, it's so I see them more in a way as I don't want to call them janitors cleaning things up, or as gardeners trimming around the garden, coming to do the maintenance, the cleanup, to make sure the code is working right. But there's no changing of the code. There's no there's no hard fork that isn't signed off by the entire community. Soft forks are different. Again, I think it's more maintenance. There's no actual change. And so you'd have to get everybody to sign off or clear majority on a change. And so that's really what we're talking about, sort of in the one hand. On the other hand, he may be saying, well, it's not decentralized because the top 20 guys own XYZ amount. And I really don't find that very legitimate. I mean, there are millions of holders of Bitcoin all across the socioeconomic strata in all countries of the world. It's the most, actually, I think it's the most decentralized from a holding perspective of any asset in the history of the world ever. You can't find an asset that so many different types of people own. So I think, you can say a lot of things about Bitcoin, but to say that it's not decentralized is probably one of the ones that you can't say. You may not think of it as a store of value, or you don't believe in digital value. Look, also, there are tens of thousands of node operators out there, people, verifying the code. I don't know why or how. That person should read Jan Pritzker's book, Inventing Bitcoin. Read those 100 pages and then come back to us and tell me that it's not decentralized.
Yeah, so Jan Pritzker's book was fantastic. I also wrote a small book called The Sweet Life with Bitcoin, because I was taking so much guff, Dan, from my clients when I brought them into Bitcoin. I said, okay, I got to write down and explain it to them. And so I sent this out. I'll tell you what, if you're listening to this show right now, send us your email. And the first 100 people that send me an email to Wealthion, maybe we can post where they can send the email, producer geniuses. And I'll send out 100 free books. Sweet Life with Bitcoin. Not as good as Pritzker's book, but I'm going to tell you what, I really write in 9th grade English. So it might be easier to understand. It might be easier to understand the Pritzker's book. It's called The Sweet Life with Bitcoin.
Anthony, let me just interject. After I read the Pritzker book, I bought like 20 or 30 copies, and I mentioned that I had done so on Twitter, and he sent me another 100 books to give out. And this was to prospective investors of my private equity fund that invests in the sort of later stage companies in the digital asset ecosystem. That's One Roundtable Partners, and then 10T Holdings. And so I've handed out all 120. It's a very easy book to hand out. I'm just saying. I know yours as well. My guess is they'll all be gone within a week or two. Yeah.
Well, and I appreciate that. So we're 928-436-6624, 92 the Mooch. We've got some email questions, Dan. Let's pop up a an email question. Guys, serve up one of the email questions. We'll ask Dan, do you think we'll consolidate towards the 30K range until we have a pump to the all-time high as we approach the halving? And this is from Tyler Dusant via chat. So he's asking, are we selling the
No,
are we selling this news about the ETF down to 30K?
Yeah, let me just first start by saying, I probably traded over 100 markets in my career, managed P&L intraday, day to day, week to week, month to month, year to year for pretty, I have a track record of 16 years. And Bitcoin, Ethereum, which are the two core assets of the space, the other cryptocurrencies, this is the most difficult space to trade by a factor of 10x. The volatility metric of measurement of Bitcoin, Ethereum, somewhere between 50 and 100%. So, I hate to give short-term trading views, but I will tell you this. I think, look, this market can head fake you and cause tremendous angst. I think that the right way to approach this is to think Bitcoin will make new highs this year, period. The halving will be positive. The Bitcoin ETF is very positive. And I can get into that in a second for why I have some sort of non-traditional reasons for thinking why. So I think if you're worried about a 20, 30% drop, which probably happens, 10 times a year in the course of a year, I just think you're looking at it the wrong way. If it drops down to 30,000, which is certainly possible, I think that'll be the last time to buy before making new highs. So I just think I think it's too fine a point to put on it here. There are too many good things happening. But could it happen? Yeah, it could happen. I don't see it below 30,000 really. But again, the way to build wealth in this space is to have a position to hold on for 10 years. And that should be your mindset. You should be buying every month or every quarter, a set amount of your portfolio. I think it should roughly be, I used to say 1% in 2019, then I went to 3%. I think really you've got to own 10% of your portfolio has got to be in the space, whether it's Bitcoin and ETH, a venture fund that invests in projects, a fund like mine that invests in companies that are, making $50 million in revenue or more. It's up to you to decide how you want to allocate that. But I don't know what you think about that 10% number, which I think that's a pretty basic number. I mean, I'm well over that.
I love that 10% number. And I think what happened to me, I started at 5%. It actually got to 20%.
Yeah.
But then unfortunately, it went back down to like 4%. And now it's closer again to 17, 18%. So the point being is, and I think he's making a good point, we have lots of volatility, and it would be impossible for you and I to predict that short-term move. But I think what you're saying from a macro perspective, as more wallets are added, as the Lightning Network continues to adapt, lots more infrastructure, lo and behold, could Bitcoin start to look like the market capitalization, so to start to become the market capitalization of gold? And I believe it could, and I think you do as well. And let's just say for the skeptics, we're only half right. And the market capitalization of gold is, 13 or 14 trillion right now. Could Bitcoin go to 7 trillion? And if that's the case, well, guess what? It's an 8 to 10 times return from here. And I don't want my clients to miss that, Dan. And I know you don't want your clients to miss that. And that's why we're here talking about it.
It's with risk. You're not getting to that $300,000 or $400,000 Bitcoin price without having, again, in 3 years from now, we probably have another drawdown of 70%. And then it goes up 5, 6, 7, 8 times. Then we have another drawdown. And so the trick is not to have our bullish view, because I think that's very clear. The trick is to hold on through the volatility. That's the fancy part. That's the the fancy dancing. And so if you could just remove yourself from the minutia, and I think Raoul Pal is now out there saying, "Don't F it up" every day on the Twitter, which is a reference to just approach the investment in the right way, and everything's going to be fine. Don't try to be a genius here.
Okay, let's take another one. I think we got a few more in the chat. We may have a few call-ins. Please address the politicization of Bitcoin. Boy, this is a really good one, and this is a great friend of the show, Andrew Perillo. Is it solely because it's the anti-fiat currency store of value that undermines unlimited creation of paper currency? Why do you think Bitcoin has become political, Dan? I met with, and I think you'll enjoy this, I met with one of the regulators from the UAE yesterday at this conference here in Switzerland, and they were very clear with me that they have a non-political regulatory body. They're not looking at it from a regulatory, Elizabeth Warren hates Bitcoin. Gary Gensler, Elizabeth Warren is Batman. Gary Gensler is Robin. They're driving around in the anti-Bitcoin mobile like the Ghostbusters. And even though they're losing court cases after court cases, they're trying to stop Bitcoin. That's politicization. Why do you think it is that way? I think Andrew's making a good point. I'm just wondering, why do you think it is that way?
I think there's a feeling amongst Democrat and more left-leaning that they lose control somehow. And, look, I grew up, I don't know about you, Mooch, but I'm a Reagan free markets guy.
Yes.
I believe
man, do we miss him, my friend? Do we miss him?
I know, I can't think about it. But I do believe in free markets, and free markets are essentially, they're voting mechanisms in and of themselves, right? It's the residue of millions and millions, hundreds of millions of people voting on value. I don't know how we could ever do better than hundreds of millions of people, no one individual. And I think it scares them to lose a little control. Instead of thinking, let's trust the market, right? Let's let it determine where value should be placed. And we do that in the stock market, we do it in the bond market, we do it in the emerging markets. People decide they're interested in Asia, they make investments in Asia. They decide they're not interested, they don't make investments in Asia. If they were so sure about their opinions that they were right, they should just let people determine, right? What happened here in the US is really a travesty. It's taken 10 years to approve an ETF. Think about all the wasted time and energy when you could have just said, sure, we'll do our work, we'll do our diligence, and we'll let people decide. And so I think that that's essentially the division. It's this idea, there's a perception that control is lost. Also, the anti-fiat currency store of value, I'm not sure that that's necessarily connected, because everybody knows that Bitcoin is limited in supply. There are only 21 million Bitcoin. There will only be 21 million. And fiat, of course, increases at a certain rate every year. I think that's a fact. Now, whether people like that or not is a different issue. Every asset in the world, dollars, S&P, bonds, is down 99% against Bitcoin in the last 12 years. So there's been a huge wealth transfer to the owners of Bitcoin, the early owners, the guys who bought Bitcoin and mined it at $1 or bought it at $100. Their wealth has increased dramatically versus people who own NASDAQ bonds yielding now 5% in the short end, or whatever it is. And so I think the market has already told you that if you don't own something in this space, now I'm not saying the next 10 years is going to have the same 50,000% return, but it's still early enough in this process, in this adoption process, that I think your suggestion that Bitcoin could 10x here, I think it's very unlikely that bond or stocks or any assets generally will 10x. You know, maybe you have certain individual stocks, of course, that do, but I just don't. And I think the space itself, which holds about $2.3 trillion in value, could easily 10x over the next sort of 5 to 10 years, easily. So, so that's why I think that the debasement of fiat, which is a fact, isn't really connected to the politicization. You follow, Anthony? What
I do. I think you're saying it very well, and I think it's one of the reasons why we're both in Bitcoin. Before we go to another question, I was dying to ask you this one myself, so I gotta ask this myself. We have very smart people that hate Bitcoin. I mean, let's just be honest, okay? I work with Gensler at Goldman. I think he's a smart person. Hates Bitcoin. Jamie Dimon, he has told the Congress if he were the American government, he would shut it down. 2 days ago, he said Bitcoin was worthless. He hates Bitcoin. And then you got people like Paul Tudor Jones, who I know you're familiar with and friends with. I mean, he's a brilliant man. He's long Bitcoin. You've got somebody like Stan Druckenmiller. You know, somebody said to me yesterday at this event, if you study Bitcoin, it's a one-way move. You can't not like Bitcoin if you do a deep enough dive in Bitcoin. Meaning, I don't know anybody that's read all there is to read about Bitcoin, or like you did, hung out with the white paper to really understand the technical aspects of Bitcoin, and then said, oh, okay, this sucks, I'm going to pass on it. So tell me what's going on. Why do we have super smart people not liking it?
Look, you've been involved in the politics of the U.S. too, so you know. I think it's pretty clear if you step back and you say, well, who would I give my money to manage? Where do I think I'm going to get a greater return? Am I going to invest with Paul Tudor and Stan Druck, or am I going to invest with Gensler and Jamie Dimon? I think if you're an investor and you want to return a high return on your money, I think it's pretty clear. They don't always, the older guys, they don't always articulate exactly why they're buying. I think, Paul has come out and said very clearly, he thinks it's the fastest horse. He wrote it was a 5-page paper or so about it in, I think it was 2020. I think you can read that on the net somewhere.
Yeah.
And Stan has gone back and forth on it, but is such a massive moneymaker. Whatever his reasons are, it doesn't really matter. You've been paid to follow Stan's views. The political establishment, I think it's again this issue about control, fear of losing control, and that's why. I mean, politics is about control. The other guys are about making money and seeing value. I would never give Jamie or Gensler a dime to manage ever. I don't care how much JP Morgan stock is up. He's got a monopoly that the government has backed, and he gets to buy assets for nothing and deposit money that he borrows at 0 at 5%. Great, good for him. That's a great business if you can get it. But let me just say one thing. There's someone in the middle, and I think that person is Larry Fink. Larry Fink 2 years ago was a Jamie Dimon character. He came out, it's a fraud, it's for money laundering, we don't want to get involved with it. And his about face in July was the kickoff for this I call it, we're second inning of this bull phase. He kicked it off and he came out and he said, Bitcoin is a global asset, it's an important asset, and we're going to get the ETF. And so I think that, I don't want to say Jamie Dimon will eventually get there. I don't think it matters, Jamie Dimon. In fact, it's actually pretty good because, you know, one of the old sayings on Wall Street was that bull markets climb a wall of worry. And so if people want to worry and not invest, they have a good reason. They just say to themselves, oh, Jamie Dimon doesn't think it's real. And he's the US's #1 banker. So you know what? I'm not going to invest in it. So he gives people a reason not to do it.
Yeah.
If everyone is already long, then the price is probably a lot higher and the investment is probably not as high a quality. But
Right.
you know, as we said, we are very, very far away from that.
Yeah, it's very, very early. Let's take another question. Maybe we have a voicemail question or someone calling in. Tyler from Missouri.
Hey,
How are you, Tyler?
Or is that Morgan Stanley?
I'm from Mississippi in the United States.
Oh, Mississippi. I'm sorry. I thought.
Yeah.
I said Missouri. This tells you how clueless I am as a New Yorker. Go ahead, Tyler.
Specifically, companies providing digital products that rebate the traditional consumer with Web3 digital assets to introduce them to multiple crypto communities.
I couldn't hear any of that, Anthony, if you could repeat it.
Okay, yeah. So say it again, Tyler. I'm sorry. For some reason,
Hey,
The volume was very low.
yeah, the volume was low on that. I'll raise my volume. Let's try it.
This is Tyler.
Say it again,
Dussault.
sir.
I'm from Mississippi in the United States. I'm also building on the Elysium network, and I had a question for you about digital products. Are you looking at real-world asset projects, specifically companies providing digital products that rebate the traditional consumer with Web3 digital assets to introduce them to multiple crypto communities?
So I think the question. Yeah, go ahead. I think the question
I
about
can
real
answer
world.
that.
Yeah, go ahead.
Yeah, I mean, I think, look, RWAs and the tokenization of real world assets, RWAs, is a trend that just really kicked off this year. I wouldn't even say it's in the first inning. It's the first batter of the first inning there. And it's simply the idea that assets from the real world, commodities, bonds, can be put on a blockchain and therefore become fungible with all other assets on all blockchains. I think this is definitely happening. We have one of the companies we've invested in, Figure. Anthony, you might know Figure, Mike Cagney, the CEO. They have made progress in this area. There are other smaller companies that this year have made progress tokenizing bonds. And to be honest, I think stable coins, in a sense, which are just currencies backed, they're fiat currencies that are represented by a digital token, USDC, which is a Circle's stable coin, in a sense, is almost a real world asset, or let's say an old world asset that's been tokenized. I think that trend has started, it'll continue. And I do think one day, everything we have of value, everything, the art on your wall, your car, your house, I think will be tokenized and on a blockchain. I don't know, people have been talking about this for several years, but it's just started to pick up speed today.
All right, great question. I appreciate it, Tyler. Thanks for calling in. Anybody else out there with a call in, or let's play one of our voicemails. Speaking of, Nolan from Wisconsin. Nolan, welcome to Speak Up.
Hi, Anthony. How's it going? My name is Nolan Reuter. I'm a young and ambitious investor, much like yourself. My question is that, we could speculate all we want, but I wanted to know what you think the probability and would be the outcome of Bitcoin breaking away from historical patterns and running to all-time highs before the post-halving cycle. What would that scenario look like, and what would it mean for the market? Thank you.
Okay, so Dan is the best person. We got the best person probably in the world to answer that question. So I'm going to let Dan take it away.
Okay.
Thanks for calling in, Nolan.
I don't know if I'm the best person in the world, but I would say, before the halving, I would say there's probably 25-30% chance. And the way that I would think about it is that we're having a little consolidation right now after the announcement of the ETF. Maybe we go sideways for a little bit. People start to say, hey, this ETF thing wasn't as big a deal as we thought. and then it explodes up. And I think this next move up, the reason I say there's 25, 30% chance, I mean, before the halving, that's just in the next few months, is that if we actually start to break, call it 50,000, I don't see how we don't continue through the new highs almost immediately. So after some consolidation here, bringing a little doubt, I think a few too many people were a little too hyped up. Remember, the market's been rallying since the summer and Larry Fink's comments on the expectation that there would be an ETF. So at least the last 5,000, 8,000 points has been, in Bitcoin, has been in anticipation. So I would say, I think that there's a 70% chance that we make a new high by the end of the year. Like that's an easier call. You're asking me on a 3-4 month call. I still think that there's a very decent probability.
But I also think it's important just to add this, that the Grayscale Bitcoin Trust, which was a great product because it had to be jerry-rigged as a result of the regulatory problems. Dan mentioned earlier, they could have given us an ETF in 2013. It would have been fair for the investor. Because they didn't, Grayscale created a trust. It was a high fee trust. Well, now we have low feed ETFs, and so you're going to see some pressure and churning in Bitcoin as people spin out of that. We've also got the FTX debacle, where there's tons of Bitcoin inventory that are now being dumped into these 11 ETFs. So we'll have some consolidation, but that doesn't mean that there isn't huge demand for this. Now, something Mr. Tapiero knows very well is Wall Street. And I will tell you right now, I'm embarrassed to admit this, Dan, because it's a sign of both of our ages, but the two Italians that you're talking to on Speak Up, we have 70 years of combined experience on Wall Street, probably more than that. And we both know the selling mechanisms of Wall Street. Products are sold on Wall Street. They are not bought. There's a legion, tens of thousands of people will be recommending to their clients a 1 to 5% exposure to Bitcoin on a fixed supply asset like that. It's very hard to imagine the magnitude. What say you, Mr. Tapiero, about my remarks there?
Yeah, this is definitely going to get sold in the marketing. I think you mentioned maybe on Twitter, wait for the marketing engines to start ginning up. I think many people would like to have their Bitcoin exposure. This is in America. I don't know about the rest of the world. This is a different story. This is just America. Like to have their assets in their equity account. They like to see everything on one screen. And also, for larger portfolios, the brokerages and banks often offer a leverage. And so I think that this is another way people will, maybe if they have Bitcoin outside and they don't feel comfortable leveraging it outside, I think within their stock portfolio, they'll then be able to potentially even buy more Bitcoin because it'll be part of an overall portfolio. The exciting thing, and I put a tweet out about this, is that, there's never been an ETF ever where the underlying core asset has a fixed supply. So what does this mean? When gold prices, there's a GLD. When gold prices go up, gold prices double, miners go out and try to find more gold, and they do, and they sell that extra gold that they find into the market. So there's a supply response. I keep, thinking when I was in the ag markets, more active, 15, 20 years ago, the ag markets, they used to say high price solves high price. And of course, what that meant was if you were thinking that there was going to be a drought and corn prices went up, the next year, farmers would find more land. They would switch land from other crops to corn, and there would be a supply response. U.S. last thing, the oil, for instance, if the U.S. had not started with its fracking, the oil price would probably be at $250. This is very important. There is no supply response possible with Bitcoin. The price can go up to whatever number you can think, and it will not create more supply. So this is very different from every other asset where there's an ETF. And there are hundreds of trillions of dollars of wealth out there. I think total wealth is, what is it, 500 trillion? So I really don't know what's going to happen.
I think that's Jeff Bezos' wealth, the 500 trillion.
I don't know what's going to happen. Like, I think it's uncharted territory for financial assets. I really do. To have an asset class where there is no bonds, currency, everything, equity, there's always more supply. Your stock goes up 1,000 times, the CEO issues equity. There's always a possibility for more supply. So it's really uncharted territory here.
Well, you've been incredibly gracious with your time, Mr. Tapiero.
Oh,
I want to remind people, you can go to the website wealthion.com /LP/ask Anthony. And the first 100 people that do that will send you the Sweet Life with Bitcoin. So it's actually ask Anthony, right? Wealthion.com /LP/ask Anthony. And Dan, hopefully I'll see you in Switzerland again or back in New York. And I appreciate your contribution to all of us, because you got there ahead of me, and I learned a tremendous amount from you, which got me comfortable back in 2020. And I think you'll enjoy this. I think Michael Saylor bought his first Bitcoin in August. I had a conversation with him in September, which really got me comfortable. So we're in it together. This is Speak Up with Anthony Scaramucci. We'll see you next week. And Mr. Tapiero, thank you so much for joining the show today.
Thanks for having me. Thanks for having me, Anthony. Good luck.
All right. Have a great weekend, everybody.